Hey folks, Tony here with Rebel Financial. So thanks for joining me again. So in light of the capital gains that people have had from GameStop recently, but they've also had big gains in some stocks over the years. So I thought it would be worthwhile to cover here. Just take a couple minutes and let you know, is what you have a short-term or long-term gain, and then how do you figure out the taxes? So a short-term gain is going to be anything that you held for a year or less. And then long-term is going to be anything that you held a day more than that and beyond that. Okay. So as long as you hold it for a year and a day, it's long-term, which is usually more favorable to people. So at least it is today. It could change. But what you're going to do on short-term is just take that gain basically and add it to your income, because it's going to be taxed just like regular income. So if you had $100,000 in income and you made $50,000 from a short-term gain, it's going to look like you had $150,000, and it's going to tax you, on the varying brackets depending on what you're in. Long-term is a little different though. In this case, what's going to happen is if that's a long-term $50,000 gain, same example with somebody making $100,000, you need to look up what bracket you're going to be in. So I use this from bankrate.com on long-term capital gains, and using my example of somebody who made in income of $150,000, they're going to be in the 15% tax bracket for the capital gain. So their $100,000 will be taxed as regular income, but they get a break, a lower tax bracket than they would if it was short term. And in this case, using my $150,000, it's going to be a $50,000. So you can see here, if your total income, including the gain, is less than $40,000, you're in the zero tax bracket. If you are, and I'm only pointing to the single person here, but you can see there's a much better deal for single because it doesn't quite double if you're married. But in this case, if you go over 441 for last year, 441, 450, then you're going to be in the 20% tax bracket. So quickly about losses, you can use your losses to offset any gains you have. But unlike losses where you've got to write the whole thing off as income, anything that you go beyond the gains, you can only write off up to $3,000. And so you could declare that and then move the rest of that forward. And there's rules, and I don't mean to get into it here, but don't get excited that if you have a loss, you're going to be able to write that off, because a lot of people in GameStop had gains. But then on the other side of that, a lot of people had losses as well. And unfortunately, they're going to be with you for a while. So I hope this helps you. Below is our contact information. So if you have any questions or you want to talk to us, please feel free to reach out. Otherwise, thank you for joining me.